And we do have some new moves today from our very own Josh Brown. Let's talk about the first one. It's TTD and it's Trade Desk. So what caught your eye here?
So I think if you look at the last 10 years of digital ad spend, it's been dominated basically by Meta and Alphabet. So YouTube, Google, Instagram, and that makes a lot of sense because those platforms know more about the viewer or user than any other form of advertising you could conceive of, whether it's television, radio, billboards, magazine pages, etc. What's happening now is that ad sales are increasingly leaving those walled gardens and going to places like connected television now that the TV isn't so dumb anymore. The television now knows as much about the person watching it as the computer and the mobile phone. The Trade Desk sits right in the middle of this huge secular trend. This is a stock that's been on my radar for a long time. It just made it onto the list of the best stocks in the market after having an incredible earnings report last time they reported. This is basically the company that acts as a two-way marketplace / brokerage for anyone who wants to programmatically put their advertisements onto television and do so in a way that's efficient and tech-centric and get a lot of feedback about who watched it, what actions they took, etc. So the way I think about the Trade Desk is they have basically built this platform outside of the walled gardens of Meta and Alphabet, and advertisers are increasingly choosing to programmatically buy ads on this platform. They're using AI. It's very cutting edge stuff. It's not like, you know, regular TV ads. They're being very smart about who they're displaying what to, what actions they want to see taken, etc. Netflix is utilizing the Trade Desk and a lot of other video platforms. So this is a fundamental story that I like a lot. The technicals basically put us in a position where I think you can buy it here for an impending breakout. You see those late 2021 highs are in sight, and so that's why I added some for myself. It's a volatile stock. It's high tech. It's high beta. So this is not a recommendation for anyone else. This is what I am personally buying today.
Okay, and the other one that is really interesting to me is Sweetgreen. So you can have some Shake Shack and Sweetgreen in your life. Maybe you need Sweetgreen for the Shake Shack. I don't know.
All right. There's a breakaway gap in this chart. So this is another name that's been on my radar since they came public. I walk by the stores in Manhattan. There's never a line outside. And at first that might sound good, like, oh, a line, that must mean it's really popular. No, lines are not good, especially not in New York. Nobody has time to wait in line for lunch. Sweetgreen has this concept called Infinite Kitchens. They bought a robot startup a few years back. The Naperville, Illinois store basically functions at this point as though it's a vending machine. It's a robot making 200 salads per hour. Sweetgreen has told Wall Street that about half of its labor costs are involved in food assembly. What that means in English is people standing there making salads along a line. They have now put this robot into 15 Penn Plaza. If you live in New York and you want to go see it, that's where you go. And Huntington Beach, California. And they are going to be rolling out these Infinite Kitchens all over the country. And I think what's happening with the stock is people are starting to think, what if they sold this technology to other quick service restaurants that are getting absolutely killed on the labor shortage? What if that becomes a business for this company someday? So it's basically a robotics play hidden inside of a lunchtime salad store. And again, this is, I think, 300 stores, a lot of potential over the long term. So I have a very small position. I've missed a lot of the run-up already. I know there's the potential for Yeah, so I understand there's a potential for a pullback, but if you've been following the show, this is the way that I put positions on for myself. I have a lot of humility, and I never assume my first buy is the best possible price. On a 3-year chart, using a 50-day moving average, you can clearly see this stock had filled an upside gap after reporting earnings last time, fell all the way back down, and then gapped right back up on the last earnings report, which, by the way, was a very good report. And so this is the kind of thing where I think people don't know the story, Judge. They came public kind of at this time where all these SPACs and low-quality companies came public, and Sweetgreen's IPO kind of got lumped in with them. But this is a very different story. This is a company that is, in my view, on its way towards sustained profitability and has this really interesting technology that we could see proliferate.
Even up 230+% year to date, there's still enough unknown, I suppose, you think, to continue to carry this stock higher, even though I know you just suggested it could pull back.
It's only, yeah, it's only a few $billion market cap. It's a small cap stock, and if they're going to continue to expand at the rate that they have been, from my perspective, missing 30%, 50% or whatever is not really going to be that damaging. That being said, I have firepower. If the stock falls lower, it'll work in my favor because I do not have the amount of shares that I would want to have. So I'm okay in either. If this breakaway gap keeps going, all right, at least I have some. And if there's a pullback, which who knows, could start later today, I'll be ready. This is a new investment, and it's not a trade, and it's something that I plan to learn a lot more about as I add to the position.
All right, it's a good look here at all of those charts. It's getting a pop, certainly not a pullback right now. We'll see what happens. Josh, thanks for that.